What is up, YouTube? Welcome back to Stocks by the Numbers. And today I wanted to take a look at Mattel, toy company, symbol MAT. And this is a company that, again, remember, on this channel, I just want to remind everybody, I kind of use the Buffett method. I look at the numbers, I find companies with low PEs, companies whose market caps are not being reflected in the total revenue and the income that the company itself is bringing in. And a situation like Mattel, believe it or not, I mean, over the last 6 months, it's had a little bit of rise. Over the last 12 months, slightly rising. But in my opinion, I think we're going to go a heck of a lot higher. I think that this company, long term, I think we can see new 52-week highs here. 26.99 is the 52-week high, and I still think that's too low in my opinion. So I think we might see north of, I don't know, 30, 35. I want to say a 50% move, believe it or not, long term, going from 24 to 36. And obviously I'm going to show you why real quick. So we're seeing a market cap here of 8.65 billion. We got a PE of 8.5, which obviously tells us it's undervalued from a PE standpoint. Healthy EPS here. So I noticed a few things here. First of all, last 4 quarters, last 4 quarters beats on the EPS side. And here, if we switch over here annually, 4.5 billion, 4.6 up to 5.5 billion. And what you're seeing here also is the earnings that they're making from this revenue. So you can see, we go from losing $500 million to losing 200 million, made 120 million, made almost $1 billion, or 5.5 billion that they did back in 2021. Obviously, the quarters spike up and down a little bit because, there's the holiday sales that really kick this company into gear and have them earn a little bit more revenue. But you come down here, Stifle, hold to buy. D.A. Davidson's got a buy. MKM Partners, upgraded from a neutral to buy. Davidson buy again. Stifle, hold. KeyBank, overweight. So everyone is either holding or bullish on Mattel right now. And again, the reason being, the company brought in $5.5 billion last year, saw good earnings from that, and we're seeing a market cap of only $8.6 billion. So, even if we go 2 times this revenue, you're looking at what, $11 billion? So that's what, maybe like a 30-35% move from here. So that's why even conservatively, that'll give us what, like a $32 stock or something. Now again, this is long term. This is, next week I don't think it's going to be north of $30. But long term, for you long-term investors out there, people who can, actually buy shares and just like tuck it away and just wait and let it grow over the years, that these are the companies that you're basically looking for. Again, low PE, healthy EPS, decent earnings, and the market cap, in my opinion, right now is undervalued. Even Yahoo, it's funny, some of these prices are crazy, but look at the 1-year estimate on Yahoo, north of 32.5. I mean, I think I agree with that number. I agree with that number. And if we switch over here to financials, I mean, everything on this looks pretty decent. Look at the total revenue slowly increasing over the years. We looked at that. The cost of revenue, now look, it went up 2.8 compared to 2020, 2.3 billion. But look at back in 2018, 2.7. So they were spending 2.7 to make 4.5. Now they spent 2.8 to make 5.5. So even though the cost of revenue has only slightly increased, the actual revenue itself has made a jump. Going from 4.5 billion to 5.5 billion. I mean, that's nothing to sneeze at. You're talking about what, like 17.5%, 20% jump right there. The gross profit that they're making off of that money increasing. Operating expenses, look at this, in line, and even lower than where it was a few years ago. Operating income is up. I mean, basically anything you look at looks pretty positive here. And if we switch over here to the balance sheet itself, here's 2021, here's 2020. Assets are up. Look at liabilities, though. Liabilities actually down a little bit. Capitalization, their common stock equity. I mean, basically any way I look at it, working capital is up. Their invested capital is up. Look at the book value. The tangible book value was minus over $1 billion, now minus 300,000. Total debt went down, slight decreases year over year. from 19 to 2020 to 2021. Now, debt, obviously, debt went down almost 10% right there. So when I just do an overview of this company, I like it. Yeah, I like this company right now here at these levels, even though it has had a run up. And in my opinion, I feel like only something catastrophic will potentially slow this company down. Now, I know everyone's still talking about hyperinflation and things are getting more expensive, but, obviously, everyone has kids and everyone likes toys, and companies like Mattel and Hasbro, honestly, I haven't looked at, but I'm sure they're probably in the same ballpark as Mattel. But, barring us going into a world war where resources get more scarce and, something like a toy company, I mean, it's already viewed as a luxury, but something that's viewed as not a necessity, right? Because if the shit really hits the fan and we have to tighten our belts, like back in World War II era, I mean, a company like Mattel is not going to be generating these increases in revenue because people are going to stop spending money on things like this and spend it on the necessities that they need. So, again, if world events start to turn more negative, then Mattel might stagnate right here and just kind of hang out here in these low 20 levels. But in my opinion, if everything stays the way it is, based on the numbers that we just looked at, on the balance sheet, on the income statement, revenue $5.5 billion, market cap only $8.5 billion, and again, if we come down here, I like this positive. The fact that they rallied up from negative earnings into a good pop to $5.5 billion, and then having almost $900 million in earnings off that. I mean, these are all good signs. These are all good signs, and this is what the big boys on Wall Street look for before they invest 8 figures, 9 figures, 10 figures into a stock. Right? Same thing happened with AMD. I don't know how long some of you guys watching this have been trading, but I remember years ago, I was always bullish on AMD, just because basically you can say that they're putting out hardware that's in line with their competitors, and it was a cheaper price. So, anyone who was building a custom PC at the time, I knew a lot of people who would buy Ryzen chips and, just go with the AMD family of hardware just because it was cheaper than Intel and Nvidia and the rest of the competitors. And then what we saw is AMD was just kind of hanging out in a range between like $9 and $12 because there were negative earnings. They weren't net income positive. Then the company went net income positive, and I remember the stock like exploded to like $27, $30 a share, and then long term we saw 50, 60, and then now recently you see what's happening. Now they're consistently beating earnings. Their revenue is increasing quarter over quarter, year over year, along with the income that they're making from that revenue, and they took the stock up, to $160 a share, right? So this is what I'm talking about when I'm talking about long-term investments, right? Because I know, unfortunately, I didn't know you guys. I wasn't making a YouTube channel years ago at the time when AMD was that low. But if I was analyzing a company like AMD and made a video on it, if we had a time machine, I would say $9, $10, $11 a share. I think it's an excellent entry because long-term, over the years, the company is growing. And once they go net income positive, you're going to really start to see even more growth. And I think that's what's going to happen here with Mattel. Now, again, is it going to explode, 30, 40% in the next month or two? I mean, probably not. But long term, we're talking 12, 18, 24 months. This is a company where just based on the numbers and based on the low PE and the revenue to market cap comparison, along with the income statement and the balance sheet, I mean, like I said, everything I showed you guys in this video seems pretty positive, right? And this is a toy company, Mattel. So, once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. And this is what I do. I just find stocks that are flying underneath the radar, that are undervalued, that are good long-term investments. And on the flip side, like I made videos about like companies like Robinhood. You know, there are other companies that are in the crosshairs, in the limelight, that everyone's talking about, but no one really crunched the numbers. And some of them are overvalued, and you can bet against them. Or if you don't like to go short, you can simply just stay away, knowing that if we look at the numbers, it's not a solid, stable investment. So Mattel, MAT, in my opinion, I'm a buyer long term. Obviously, whatever you guys do, that's entirely your own prerogative. But I just wanted to make a quick video because this one caught my eye. And in my opinion, I think it's very attractive here at these levels. But once again, stocks by the numbers. I want to thank you guys for stopping by. Moving forward, you know, I hope everything works out for you guys. I hope everyone makes a couple of dollars. Again, I have my personal Discord in the description if you guys want to stop in, if you want to talk about MAT or another stock, or you just want to BS about something. You know, I'm always here for you guys. And just like everyone on YouTube says, if you like the content, give me a thumbs up. You know, it really helps out those algorithms. Subscribe to the channel if you like the content I'm putting out. I got a few subscribers so far. I really appreciate the support, guys. It means a lot to me, seriously. And again, thanks for stopping by, and I want everyone to have a good day.